Morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Friday morning pre-market webcast. So yesterday was wedge break day. We've been talking about this bearish wedge setup for a couple weeks now, and the edge of that wedge area was about 25, and we tested it about 3 times until the final time at about 12:30 Eastern it broke. And when it broke, it did the 2 things that we were looking for. Very quick test of the 50, failed miserably, and then down to that 08 area. It bounced, I believe it was 0875, rallied up about 10 handles, and then went down to retest and made another low at 675. We've rallied during the overnight session. We've rallied as high as 29.75. We're currently trading 23.25. It made it back into the wedge. The wedge line today is at 27.28, depending on how thick you want to draw that line. So right now, from a big picture perspective, the wedge has been broken. A new low has been made. Because that 08 low was one of the first lows of the wedge when it began to create itself. A new low has been made, the wedge has been tested, and right now that test has been unsuccessful. They've been unable to get back into the wedge, and right now we're trading below, right down around 1223. So right now, I am in sell rallies mode. And so is the chat. It's a situation where the 200-day exponential moving average are currently trading below that, and we're currently trading below the wedge, and we've retested that area and we failed. So right now rallies are being sold. They just sold a very nice rally from basically from 6.5 up to 29.75, and I think we're going to see more of that over the course of time. Now, I mentioned to my subscribers last night on the evening webcast that, every time, the other side of the coin is this. Every time you think the bulls are out of it, just when you think they have nothing left and the bears are just going to run them over and take this market down to, whatever unfathomable low some bear on CNBC will throw out. People come in, they buy the dip, and it rallies. So the bears are not out of this by any stretch of the imagination. Just when you think we're getting ready to go off a cliff, that's right when they bring it back. So, it's take everything with a grain of salt, and use stops, and be hedged. The other thing I mentioned to somebody yesterday in the chat room was the whole interplay with the 200-day exponential moving average. Essentially, since October 21, we have been battling on both sides of that line. We're currently below the line. I don't think that being below the line at this moment is really any more significant than being above or below it for the last month. We are basically in the middle of a 1-month consolidation around the 200-day exponential, and somebody is going to win this battle, either the bulls or the bears. Because if we rally 100 or 150 handles up or drop 100 or 150 handles down, when we look at the daily chart in a year, this is just going to look like a congestion zone around the 200. So for you longer term traders, you've got to understand that this is basically a very choppy time in the market, and you need to preserve your capital and figure out who's going to win this extended battle at the 200-day moving average if you're thinking about putting positions on into 2012 and beyond. Okay? So it's always important to zoom out and really look at where we are in time on that daily chart. We are battling it out at the 200. Okay, let's look at support and resistance. Current trade 23 even. I'll do the upside first. 27.28 is that wedge line. 28 is also the 3-day pivot. So that's a big number today. 30.75 is 9-day pivot. Then you've got the 20-day pivot at 37. Then I have 43, 48, and 53.5. On the downside, daily pivot 12.21, then 12.16, 12.13, 12.10, 12.06, 12.03, and 11.96. Everybody have a great day trading. Mike Vacchi, Princeton Trader for Mr. Topstep. Have a fantastic weekend. I'll see everybody Monday morning. Have a good one.